Brad Williams, Frugal Finance. This video, we're going to touch on annuities. In this particular case, an immediate annuity. What is an immediate annuity? Just FYI, I used to be a stockbroker. I was licensed to sell annuities. I was licensed to sell commodities. I didn't sell annuities, mostly because it's a life insurance kind of deal. These particular products are very, very expensive. This was long ago. I don't know how expensive they are in terms of overall costs, but that's something that you definitely need to investigate. Back in the day, the people that were selling annuities in my office were making 8%, and they were making a residual of 1% to 2% over the life of the annuity. That's just money out of your pocket in terms of overall performance as an investor. But for those of you who elect to choose to use an annuity, an immediate annuity, I'll explain a little more about what it is. Some dream of spending their golden years in exotic locations, indulging in exciting trips to ancient ruins and sampling spicy local cuisine. But when it comes to retirement savings, even the most adventurous seniors may still consider something routinely described as plain vanilla a fixed immediate annuity. Perhaps the simplest of all the annuity options, a fixed immediate annuity does what its name suggests. It begins delivering steady income shortly after an investor buys a contract, often within 30 days and always within 13 months. A variable immediate annuity also delivers income quickly, but unlike with fixed annuities, your payments will fluctuate. An immediate annuity is a contract between an investor and an insurance company, with the investor paying the insurance company a lump sum in exchange for regular income payments. Those income payments may be paid monthly, quarterly, semi-annually, or annually and are generally guaranteed to last as long as the contract holder is alive, or depending on the terms of the contract for a set period of time, such as 10 or 20 years. Fixed immediate annuities? Fixed immediate annuities have guarantees that can offer comfort to retirees who worry about the risk of keeping their money in financial markets. When you buy a fixed immediate annuity contract, you're guaranteeing that your monthly or other periodic income payments will remain the same regardless of market conditions for the time period specified in the contract. The drawback of such a guarantee for fixed immediate annuities is that it won't bring big bucks. Fixed immediate annuity payments typically trail the returns that investors should see on equity and bond portfolios during a bull market. Thus, the trade-off for predictability might be lower returns when compared to what your money might have guaranteed had you invested in the markets. Another drawback to fixed immediate annuities is that as time passes, a retiree with an annuity that offers a fixed payment amount may find that their regular payments don't stretch as far as they once did due to inflation. Annuity buyers can sometimes purchase riders with a contract that features cost of living increases or fixed increases to soften the blow of inflation. But as with other riders, this will increase the cost of the annuity and may lower your overall returns. Investors should evaluate their risk appetite when considering a fixed immediate annuity. Retirees with a high risk tolerance and the ability to absorb risk may be turned off by fixed immediate annuities' conservative returns, but those with low risk tolerance and a wariness of market volatility may feel differently. Variable annuities? Investors who want to receive annuity payments immediately along with the possibility of higher returns might want to consider variable immediate annuities. Variable immediate annuities, like other variable annuities, allow you to allocate your principal into a wide array of underlying investments, including stocks, mutual funds, and bonds. Your allocations typically aren't set in stone, allowing you to move money out of one underlying investment and into the other. Unlike fixed immediate annuities, the value of your variable immediate annuity and the payments you ultimately receive will fluctuate based on how your underlying investments perform, meaning that investors have the potential to reap rewards if their investment grows, but they could also lose money if their investment flounders. As such, variable immediate annuities are considerably riskier than their fixed counterpart. The benefits of living longer? In general, those who may benefit most from immediate annuities are healthy people who expect to live longer than their average lives. If your life were to be unexpectedly cut short, you would have received relatively little in annuity payments. And unless your contract includes a death benefit or you have purchased certain riders, your surviving spouses or your heirs would not be entitled to any payments under a standard contract guaranteeing lifetime payments. To mitigate the financial implications of dying earlier than expected, when purchasing an immediate annuity contract, you can generally purchase a rider to allow a beneficiary to receive some money from the annuity after your death. For example, some immediate annuities offer a period certain benefit, which guarantees that some amounts of payment will be made to beneficiary for a certain period of time after the contract holder dies. But a contract with this rider or with any other sort of death benefit will cost more. That means it will require a higher lump sum payment at the outset for the same amount of annuity income. Investors considering immediate annuities should do their research and shop around because insurance companies may offer different features in exchange for the lump sum payments. And with all annuities, investors should remember that the annuity is only guaranteed as long as the insurance company issuing it remains in business. So you want to be sure you're comfortable with the issuer, not just with the product itself. Yeah, you can see why I have never been a fan of annuities. But if you're doing estate planning, perhaps annuity is the only alternative. Comment. Let me know your history, if any, dealing with annuities. Are you happy? Do you find them cost prohibitive? Any good tips or hints as it relates to annuities? Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.